Welcome back. Now we're going to talk about the balance sheet and T accounts. Notice we have a diagram here of a T account. Assets appear on the left side of the balance sheet, so the balance of an asset account will be on the left side of the T account. Asset account balances are recorded on the debit side of the T account. Liabilities and owner's equities appear on the right side of the balance sheet. Therefore, liabilities and owner's equity account balances are recorded on the credit side of the T account. Asset accounts, the debit amount is on the left, the credit amount is on the right. Liability accounts and owner's equity accounts, debit on the left, credit on the right. Asset accounts increase on the debit side. Liability and owner's equity accounts increase on the credit side. Generally, asset accounts have a debit balance, and generally, liability and owner's equity accounts have a credit balance. Now we'll take a look at debit and credit theory regarding assets. Assets increase on the debit side and decrease on the credit side. Assets appear on the left side of the balance sheet. Their balances are recorded on the debit side. Assets increase on the debit side. Assets decrease on the credit side. Now we'll take a look at liabilities. Liabilities appear on the right side of a balance sheet. Liability balances are recorded on the credit side. Liabilities increase on the credit side, and they decrease on the debit side. The same thing happens for owner's equity. Owner's equity accounts appear on the right side of the balance sheet. Therefore, their balance is recorded on the credit side. They increase on the credit side, and they decrease on the debit side. Now we're going to turn to page 39 of the text, and we're going to take a look at the partial balance sheet for Goldman's Gym that's based on the balance sheet on page 38. And then we're going to look at the ledger on our next screen. Notice that the total of all the debits must equal the total of all the credits. This is known as having the ledger in balance. There are 4 steps in recording transactions in accounts. First of all, just like we did in the transaction analysis section, we determine which accounts change in value as a result of a transaction. And we know that 2 or more accounts will change in value as a result of each transaction. We identify the type of account that has changed. Is it an asset, is it a liability, or is it an owner's equity account? And we decide whether or not the change is an increase or a decrease to that account. Then we decide whether the change is recorded as a debit or a credit. Remember, the ledger must always remain in balance. So let's look at page 41, and there are 5 transactions there. We'll do them one at a time. Transaction 1 is next. On August the 2nd, they received $500 cash as payments on membership dues owing. So these people owed them money for their membership and are about to pay now. The 2 accounts affected by this transaction, as we analyze, are cash and accounts receivable. The cash account is increased because cash is an asset. The asset cash is increasing because money has been received. Assets are found on the left side of the balance sheet, and they increase on the left side, which we now call the debit side of the cash account. So on our T account, we see that we had an opening balance on July 31st of $6,325. And due to this transaction on August the 2nd, cash increases $500. So we write down the date of the transaction and the amount that it increases, $500, on the debit side of this T account called cash. Similarly, when we have this transaction, The second account that's affected is accounts receivable. The accounts receivable account is decreased because accounts receivable is an asset, and the asset accounts receivable decreased because customers have paid some of the amount that they previously owed. Assets are found on the left side of the balance sheet, and they decrease on the right side. That's called the credit side. So we have the accounts receivable T account on the right side of this slide. We notice that it had an opening balance on July 31st of $3,000, and that was a debit balance. Now, due to this transaction on August the 2nd, we decrease the amount for, or the balance for the accounts receivable by $500. Decreases appear on the credit side. A general rule for recording transactions is that accounts increase on the same side as they appear on the balance sheet, and they decrease on the opposite side, just as we see with cash and accounts receivable in this example. Let's look at transaction number 2. On August the 5th, they purchased $25 worth of office supplies from Central Supply Company, and they promised to pay within 30 days. The two accounts affected are office supplies and accounts payable. Office supplies account is increased because office supplies is an asset, and it's increasing because the company now has more supplies that they just purchased. Assets are found on the left side of the balance sheet, and they increase on the debit side. So here is the account supplies T account. The opening balance on July 31st was $555. On August the 5th, because of this new purchase of office supplies, we have office supplies increasing in value by $25, and that's on the debit side. Now let's take a look at the second part of this. The second account that's affected is accounts payable. It is increased because accounts payable is a liability, and it's increasing because the company now owes more money. They promised to pay this within 30 days. Liabilities are found on the right side of the balance sheet, and they increase on the credit side of the accounts payable account. So this T account will increase on the credit side. Notice the balance in the accounts payable account of $4,680 on the credit side. Now with this new transaction, $25 is added to the credit side because they will pay this money at a later date. Transaction number 3 on August the 5th. They paid $705 now due to Equipment Unlimited for goods previously purchased but not paid for. The accounts payable account is going to decrease by $705, so it appears on the debit side of this accounts payable account. The cash account is also going to decrease, and we know that asset accounts decrease on the right side or the credit side, so this transaction is written down on the right side, the credit side, for $705. On August the 7th, for transaction number 4, they purchased 3 new tennis trainers for $545. The total of this transaction was $1,635. They didn't pay all of it with cash, they only paid $535. The remaining amount, $1,100, will be paid at a later date. So this is a transaction where we have more than 2 accounts affected. The training equipment account goes up by $1,635. That's on the debit side of the training equipment account. The cash account goes down by the amount of the down payment, which was $535. So on August the 7th, there's a $535 entry on the credit side of the cash account. The accounts payable account goes up. Accounts payable goes up on the credit side, so on August the 7th we see an entry for $1,100 on the credit side of the accounts payable account. On August the 7th, for transaction number 5, the owner invested an additional $5,000 in the business. The cash account is affected, and we can see on the debit side there's an entry for August the 7th for $5,000 on the debit side. And the capital account is affected. On August the 7th, we see there's a $5,000 entry on the credit side. Capital accounts increase on the credit side. Let's take a look at exercise 3 on page 52 together. And we're going to complete the table that's in your workbook at the same time. The first one is done for you. The two accounts affected for the first transaction on June 1st are equipment and accounts payable. We have to list the type of account, so we say equipment is an asset account, accounts payable is a liability account. And in this case, this transaction, there was an increase in the equipment account and an increase in the accounts payable account. Which side is affected? Well, when we have an increase to an asset account, the debit side is affected. If we have an increase to the liability account, that's on the credit side. And then we put the amount for each of those two, $780. Second transaction, on June the 2nd, the two accounts affected are mortgage payable and cash. Mortgage payable is a liability account, cash is an asset account. The mortgage payable account decreases, the cash account also decreases. Liability accounts decrease on the debit side, asset accounts decrease on the credit side, and the amount is $880. On June the 3rd, the two accounts affected by this transaction are accounts payable and cash. Accounts payable is a liability account, cash is an asset account. The accounts payable account decreased and the cash account decreased. Liabilities decrease on the debit side, assets decrease on the credit side, and the amount of these decreases is $1,300. On June the 5th, this transaction affected three different accounts: equipment, cash, and accounts payable. Equipment is an asset account, cash is an asset account, accounts payable is a liability account. In this transaction, equipment increased, cash decreased, and accounts payable increased. Asset accounts increase on the debit side. Asset accounts decrease on the credit side. Liability accounts increase on the credit side. So these three accounts, the equipment account increases $600 on the debit side, cash decreases $280 on the credit side, and accounts payable increases on the credit side $320. On June the 6th, we have two accounts affected, cash and the capital account. Cash is an asset, the capital account is an equity account. We know that assets increase on the debit side and equity accounts increase on the credit side. So this amount increases $3,000 on the debit side of the asset account and $3,000 on the credit side of the capital account. Now we have to understand how to calculate balances at the end of an accounting period. During the accounting period, different transactions occur, and using double entry accounting, we enter these into the individual accounts. At the end of the accounting period, we have to determine the balance in each account. We add up the debit side and we add up the credit side, and we will get an amount. In this example here on this screen, we add the transactions on the debit side of the cash account, and we get a result of $8,000. We calculate the total on the credit side, and we get an amount of $2,460. Now, in order to determine the balance, we write the balance on the side of the larger value. So in this case, 8,000 is larger than 2,460. So we write the balance, $5,540, on the debit side of the cash account. Your assignment is to complete exercise 3B and 3C on page 52 in the text and page 19 in your workbook.